Good morning, all. I hope you are well and welcome to another one of my videos. I hope you had a great weekend, by the way, and I hope you are suitably refreshed for this week ahead. So, I have two pairs on watch today. Those are Euro dollar and dollar CAD. So, I'm going to break them down for you now without further ado and give you my analysis and my thought process as it comes to me and as it came to me when I was breaking down these pairs over the weekend for the purposes of this watch list. So, without further ado, euro dollar on the higher time frames. I've touched on this previously, but we have this 1, 2, 3, which near misses this area of liquidity there. Here, this sharp move down, sharp move up, giving me a clue that there was a lot of orders there. Whether they're still there, given that this is 8 years ago, is another matter, but regardless, we narrowly missed that area, meaning that for many, this would still likely be an attractive area of value and a profit-taking area. The other thing that stands out on me is this impulse up from this 1, 2, 3, impulse up followed by this correction, this larger correction. Typically, we don't see corrections this large so early into the move, or relative to this impulse up. We don't normally see corrections which are this wide relative to the impulse up which has preceded it. So that's a factor in my thinking as well. We do have a slight near miss here to the upside, which could be taken out. But again, all of these near misses may not necessarily be filled straight away. One thing that they do, however, which is a slight negative. I've just realised I've started with the wrong pair, but we shall start with dollar CAD first and then go on to euro dollar, my preferred entry. But I've started, so I'll finish, as a wise man once said. So I'm going to carry on with this pair. What these near misses can do, even if they're not filled straight away, they can cause problems sometimes, because if you have, for example, a near miss there, and let's say we were taking out the one to the low, you can get these kind of tight flags. And what price can do is it can scoop up quite violently sometimes and then scoop back down, and that can be orders being placed at that area of value which is yet to be taken out, which can be problematic when a trade is playing out in your forecasted direction. But the further away from them that we get, the less problematic they tend to be, because obviously the further away from them we are, the less likely it is that orders will be placed in that area. But anyway, let's zoom into the area that I'm more interested in. So as you can see on the higher time frames, we have this liquidity point here. I've kind of flipped my bias on this. Dollar CAD is a pair which I think we need to remain more neutral on than some of the other pairs at this moment in time. But the way I'm seeing this now, because of how price developed on Friday, and I shall touch on that when we get down to the lower time frames, is we have this sharp move here, and then we scoop back up and we near miss it. Then we scoop back out again and we take out the highs. That gives me a clue, particularly as we now have a kind of evening star formation. When I say evening star formation, what I mean typically is we have this move up followed by the stalling price and then a bearish close which closes below the body of that previous candle, right? So we have that kind of evening star formation. We've now pushed below here. We've washed out all the orders that were here and here. And looking at this, we potentially have this parallel channel, this 1, 2, 3, and we have this near miss here to this sharp point here, which will become a bit clearer as I drill down. This sharp point here, okay? So we have this structure here, we break out of that structure, then we have this sharp move down and this very sharp move up, which caused this move to the upside. This big move to the upside was caused by this exchange of liquidity here, giving me a clue that there's potentially a lot of orders here and that we may see that 1, 2, 3 which taps into that order to take out that high, and then we have a 1, 2, 3 which takes out this near miss to this high, okay? So as I drill down, you can see that as this move up to this area, it was very corrective. We also have a near miss there. We kind of have this 1, 2, 3, this being the near miss of this structure, which takes out this high, and then we have the push down. And then as I drill down, I'm just going to analyze. So then I asked myself, we've kind of as well near missed this area here. given me a clue that we likely need to take out that, even if we were to push to the upside, as I was kind of anticipating last week. So I asked myself, am I well positioned for a move to the downside? Well, yes, because we've not taken this low out. So even if we were to push to the upside to take out, let's say this high here, let's say this was an impulse correction continuation to take this out, we would probably need to tap into this low here, which just happens to be a sharp area of liquidity before that move to the upside could occur. So am I well positioned if I get short in this area of value today? And so the answer, in my opinion, is yes. The next thing I ask myself is, what is the sequence like to the downside? Well, we have this impulse, smaller correction, impulse into a slightly larger correction, impulse, smaller correction. Then we have this kind of running channel here. We have this kind of running channel here, like so. And then we move into another piece of structure, which is slightly larger, which kind of makes sense given where we are in terms of this low here. Okay, so previously I was looking for a move to the upside, but we don't typically see. I was seeing these tight flags and this kind of move down here as potentially people getting out of their positions for a break below here, a break back in, and a flag. But when we kind of pull back up like this isn't really the price action, okay, that we would typically see. We don't normally see so much volume. It's to do with the volume. We don't normally see so much volume and then a tight flag to the upside. So it was this move up here, followed by the move back down, which kind of flipped my bias. Because, yeah, typically speaking, I've been doing this for 4 years now. We don't normally see this much volume. If we're going to get a move to the upside, a tight flag up and a move to the upside. What this could be, this could actually be a kind of reversal structure like so, and then we end up with a 1 2 3 like that for a move to the upside. But obviously, if you just count the candles, that's not going to be ready by the end of the day, so there's no point in me having something like that as my forecast at this moment in time. And the other factor in that thinking as well is that, given how close, if this is a reversal structure, given how close the first touch would be, the second touch would likely break the low. And although it does happen, we don't normally see the second so much. We don't normally see the second low break an area of liquidity if price is going to scoop down again and break it a third time and move to the upside, because in breaking below that low, we've kind of tapped out some of the liquidity. Okay, so if it does come down a third time to break it, there's going to be less liquidity there by definition, because the second low actually tapped into that area, if that makes sense. So just giving you my thought process. Of course, that could still occur, but this is just not what price typically looks like if it's going to break below, push back in, flag, and then go to the upside. So for that reason, I've flipped my bias on this. And you do have to be neutral to do such things. But this is what I'm going to be looking for by the end of the day. Again, this might not be ready by the end of the day either, but I think it's more likely that this will be ready versus the previous analysis, which I just gave you a moment ago. So what I'm going to be looking for, this is kind of looking like a middle section to me within a kind of larger flag to the downside. And one of the clues for me is the fact that we have this, we move down, and then we have this sharp move up. Now I asked myself, what is that sharp move up? You know, if this was if it moves up sharply like that after a move down which has broken some highs, then that is likely orders being placed. Where are they likely to be placed? They're likely to be placed in that area, and that's what that sharp move up was. If this is a flag to push lower, for example, then look how much it pulled back. It pulled back like, say, 70% of the move. And when we pull back typically 70% of the move, what tends to happen is that this just becomes some kind of middle section like that to push back up. Hence my forecast. Okay, so what I'm going to be looking for, because we do have to be mindful that, you know, because we're more neutral on this pair and we have moved 90% of the way to the start of this structure, we have to be a bit more mindful of how we enter this pair. And because there's kind of a sharp hook point sat just above this, which is only about 10 pips away, and we have kind of this, if we cut through this volatility wick, if we have another high there which is sat just above here. So for that reason, what I'm going to be looking for on this pair is price to come down, give us more of a base to this structure, and then if it comes up to this area, I'll be looking for a push down and a flag, and the tight flag is what we who trade the Falcon strategy look for as confirmation that this is a completed structure and that price is not going to suddenly tap into this area or this area. Because if you were to try and call the top of this structure, for example, you'd likely be tagged in, tagged out, price moves up to here, then pushes down. So the insurance entry, the move down followed by the flag, is the insurance entry, the confirmation that we look for that this is a completed piece of structure and that price is likely to move to the downside. And of course, if it does reverse from this area, then I would be in profit by something in the region of 3 to 4% before price potentially reversed from that area. And of course, if we kept going to take out these lows here and complete this bigger structure, then obviously without even needing to measure that, there's potentially a lot of profit potential to the downside. Whether we catch that in one go or not is another matter. But that is my forecast. This was done on Saturday morning. I have an alert set below the area of value. If that does not trigger by the end of the day, then I'll not be looking to place a trade on this pair. Now, my favorite of the bunch, which is euro dollar, which I should have broken down first. Let's zoom out to the higher time frames. This one is more clear cut in my opinion. So on the higher time frames, we have euro dollar back on watch. So on the higher time frames, we have this 1, 2, 3, which taps into the last line in the sand, the last exchange of liquidity that I can see on my charts going back in the past. Again, this may not be an area. This may not be an area where there is orders sat, given that this exchange of liquidity happened 21 years ago. But it would certainly be a good profit-taking area for people that are looking, that perhaps caught this sell move, that are looking to get out of their positions, particularly when it lines up with a 1, 2, 3. So it's no surprise to me that we had a big exchange of liquidity there and that we saw an impulse and a correction to the upside. As I've said previously, this does look longer term now that now that this is a completed piece of structure. At this moment in time, it looks like we may get that impulse correction continuation to push higher, but that doesn't mean, given that this is the weekly chart, that we can't be looking for moves to the downside in the meantime. And one of the reasons for that is because we have an exchange of liquidity here. We tap into it by way of a 1, 2, 3. So this is potentially a completed piece of structure, a 1, 2, 3 move, completed 1, 2, 3 move. And the clue for me that we may be moving to the downside to take out these lows is because this low near missed this low. It didn't quite tap it. And this low kind of near missed this one, giving me a clue that there's still liquidity here and here, which needs to be tapped into before that move, longer term move to the upside can occur. Okay, so I've said this in previous videos, but for those of you that are new, just breaking down the higher time frames as I see them. The other clue that this was a completed piece of structure is the fact that we have a 1, 2, 3. As I say, it doesn't always mean that just because we have a 1, 2, 3 price is going to reverse, but what it does typically mean is that this is a completed move. So 1, 2, 3 is typically a completed move, and when it lines up with a 1, 2, 3, which just so happens to line up with an area of liquidity, that is a strong indication that price will move to the downside, which it has. Okay, so I'm not too concerned about this low, because when we break, those of us who trade the Falcon strategy, when we break a lower trend line such as this, or an upper trend line if we're looking to get long, when we break a trend line like this, and we do so impulsively, we know that we have a 90% chance of getting 90% of the way to the start of the structure. And when the start of the structure happens to near miss another low, which happens to be a sharp move down followed by a sharp move up, that gives me a strong indication that this holds little significance other than being a good profit taking area for one or two people. And if you remember my previous videos, I said that we'd likely get some kind of larger flag which looked a little bit like this, which is what's now forming. I think I had the ray line there, and I predicted something like this, and it looks like we're getting something in that kind of region. So one of the reasons that I'm able to predict some of these moves is because I'm also measuring the we don't trade Fibonacci sequences, but I'm measuring the impulse down, and then I'm looking at what would be a healthy correction when I'm making these forecasts. Something in the region of 30 to 50% on these kind of less corrective pairs would be a healthy correction, particularly when they're at a profit-taking area, what would be a profit-taking area for a lot of people. So this kind of makes sense what we're seeing at the moment. Again, this may not be ready by the end of the day as well, but what I'll be looking for, so I asked myself, am I positioned well for that move to the downside? Well, yes, we're slightly quite far into the run relative to this piece of structure, but there's plenty of profit potential to the downside, and structurally, this couldn't be much clearer. So yes, I'm well positioned. We broke that trend line that I was talking about impulsively. I've just removed my trend lines from the chart. That, if you remember previously, I had them all separating these structures. I've just done that for clarity, in the same way that on a Sunday I clean my office, and my office is very minimal now. My desk has very little on it. I do that for minimalism is obviously something which gives you a clear mind. So one of the reasons we don't have loads of indicators on our chart is for minimalistic purposes and for clarity. So the same reason I clean my desk every Sunday is the same reason I've just removed all the clutter from my charts, just to make what I'm looking for even clearer and to give me even more confidence in my trading. So am I positioned well? Yes. Is the sequence good? Yes. This is a bit of a corrective wave, but we can see the tight flags into slightly larger ones, into tighter ones, into larger ones. There's nothing about this sequence which to me looks unreliable. So therefore, the next thing is the entry. And the entry for me at this moment in time would look as follows. Okay, so this is without question my preferred entry. If dollar CAD and euro dollar were to shape up at exactly the same time, I would take euro dollar. So that is one of the reasons it's higher up on my watch list. And what I'll be looking for is, if we push down, get a bit more of a base within this structure. You can see what I forecasted on Sunday as kind of starting to manifest itself. Whether it does completely or not is another matter. We're not fortune tellers. We're just here to, ascertain what our entries would be and ask ourselves, can we manage the position? So if we push down, get a bit more of a base, and we push up, tap into this high, because there's no kind of structure leading up to this high. It's just one area of liquidity where we had a sharp move up and a slightly sharp move down, which just so happens, just to touch on it, to be retesting the back end of that. So it makes sense why we would tap into that area, particularly when this is a bullish wick. Often these bullish wicks get filled, so a bullish candle with a wick above it. If we just zoom out to the 4-hour chart, once again, we have a 4-hour bullish wick in my experience, and according to my documentation, these very bullish candles which have a wick above them get filled a lot of the time. So that also makes sense why we'd come up to fill that and tap into that area. Whoops. So if I just put that back where it was. So what I'll be looking for is, as I said, a bit more of a base. And then if we tap into the area, again, this might not be ready by the end of the day. If we tap into the area, I'll be looking for the push down the flag, because if this was to happen by the end of the day, there would be no structure leading up to this. And so I wouldn't just take a risk entry. However, if we had something like this, which would obviously take longer, if we had a kind of 1, 2, 3 like that, then I would consider a risk entry, depending on how that structure formed, because we would have had a confirmed 1, 2, 3 move. Okay, so that's what I'm going to be looking for. The tap into that a base here, tap into that area, followed by the push down and the flag, and then we would likely have stopped out all the stop losses that were above here and above here, and all the limit orders, and that would give me the confirmation that I would need, that move, that longer term move to the downside, would be in play. But that is it, folks. That is my thought process and my analysis today. As I say, whether these things shape up or not, it's an entirely different matter. It's not for us to try and be fortune tellers. It's just for us to ascertain what we're looking for, ask ourselves whether we can manage the trade, and then execute accordingly if the entry shapes up. If it doesn't, then we go and do other things. Okay, that's what being a trader is about. It's not about hunting for trades that haven't materialized. It's about setting your alert, as I have there, and then just leaving it, seeing what happens. So that is it, folks. Thanks for watching, and I will be back with another video, most likely tomorrow, if I have a pair or pairs on watch. Have a great day, and I will speak to you again soon. Thanks for watching.